Good morning, good afternoon, evening, everyone. I know we have people calling from different parts of the world. We're very excited about today. We plan to show you a portion of the solution of the Revify solution that Armin and I built together with our teams. And we'll just jump in. So first of all, maybe just quick introductions. I can kick off and then pass it on to Armin for this and the next slides. But my name is Enrico Sieni. I've been working in pricing for the last couple of decades. I've built from scratch and led 3 different pricing teams at different organizations. And over the last couple of years, I've been working solo, helping companies build pricing teams and lead them through maturity. And of course, through that process, being able to reap the benefits on the top line and the bottom line. And then, of course, as many price executives do, we get in touch with other people that are super smart in the sector, and that's how Armin and I crossed paths and started collaborating together.
Awesome, thanks, Enrico. My name is Armin Kakas. For those of you that haven't met me before, similar background. My background on the pricing and RGM front has been heavily sort of the fusion of advanced analytics, data science, and pricing, and so led pricing revenue management teams for a few industries, lots of consumer experience, but really passionate about analytics, really passionate about kind of AI and ML. Generally, I'm just a data nerd, so very, very happy to speak with all of you today, and hopefully you guys will have some good questions. So maybe we'll dive right in, just because we want to leave some more time in the actual demo for Revify. But I wanted to talk about.
Armin, do you mind going back to presentation mode? It's a little bit small otherwise, potentially for.
Sure. Let me just increase it maybe to this size, and we'll send out the presentation. Right? Otherwise, it's going to be full screen.
Yeah.
Send out the slides, guys, and we'll send out the recording as well. But maybe we'll talk about kind of why we decided to establish Revify. So both Enrico and I have been both executives as well as sort of practitioners of pricing and RGM, and so. One of the things that we've often struggled with on the client side, right, is lots of pricing analytics and optimization solutions and tools, and there's a number of really great ones, right? Like the usual kind of suspects. But for a lot of those, it was cost prohibitive to stand it up for, especially mid-market firms, right? And the lead time to actually implement those solutions was just a long time, 6 months, 9 months, 12 months. Not only that, but you typically need a support person that is dedicated to that account to sort of maintain the tools and evolve them, et cetera, et cetera. And so there was always this gap between sort of the amount of money that a lot of mid-market firms have to deploy to stand up pricing analytics and optimization solutions, and this notion of just not having the human capital, right, to actually deal with that and stand it up, et cetera, et cetera. And the same thing on the as consultants, right? We're noticing the same thing as we're interacting with companies. Mid-market firms, they don't want to spend, $200,000-$300,000 or $500,000 on a pricing strategy engagement, to spend upwards of, 6 figures, $1 million on some fancy tool, right? They want results fast, and so we felt like creating a pricing and RGM as a service solution, which is a very highly affordable cloud-based pricing analytics and RGM analytics solution, coupled with sort of a subscription-based advisory service at a very affordable price for mid-market firms, is the way to go, because there's no IT involvement aside from kind of sharing the data, et cetera, et cetera. And then it also gives these mid-market companies just a readily available pricing expertise to start driving value through sort of quantified pricing work streams, right? And see a testimonial from one of the clients that we've had so far, right? The actual process of Revify is very simple. We stand up customers within 7 to 10 business days, right? And the process is sort of 4 or 5-fold, right? We go through a data ingestion and cleanup effort through our customer portal, where clients upload their transactional data and CRM data if they have that and want to share that, and we go through sort of a very secure process, run it through our diagnostic analytics tools, where the output is a data health diagnostic, right? So we actually share, as the first step, a data health check, and it's a fairly detailed report where we advise the clients on how to sort of improve their data assets, transactional CRM, firmographic, et cetera, just to be in a better position to do pricing and customer analytics, right? The second step is we actually engage in a pricing and profitability analysis, right? It's a detailed customer opportunity diagnostic that we do with the clients. And that's irrespective of whether they sign up for additional advisory efforts or not, right? If they just sign up for the baseline Revify solution, we spend upfront quite a bit of time with them to sort of identify the key levers that drive incremental revenue and incremental profit, whether it's surgical price adjustments or it's cross-sell efforts or it's rationalizing discounts and having better discounting guardrails, et cetera. But that's typically the second step that we do upfront when a customer signs up, right? Then we also meet with them. We do a live review of the opportunities. We prioritize the efforts, right? Obviously quantify it. We recommend typically recommend a staged approach to implement some of the pricing and RGM recommendations that we've identified. And for those clients, which is quite frankly, majority of kind of SMBs and mid-market firms, and again, we're targeting distribution and manufacturing. That's what we have a turnkey solution for. Majority of them will need some advisory efforts, right? And that's where we have certain packages, depending on the appetite and the maturity of that company, where we can engage, whether it's 20 hours a month, 40 hours a month, or more for a sort of a customer engagement, but all within a very kind of formalized, highly affordable subscription manner, right? Enrico, anything else to add on this one?
Yeah, I think one of the things that we heard from customers that they love is not having to add yet another software to the tech stack.
Yeah.
So the fact that we can operate independently just makes it so much quicker and more effortless, instead of having the usual committees having to meet and do an ROI on the long term, stand up teams, consultants, and so on, to implement another software and somehow hook it up to maybe sometimes all the ERP systems that really have a tough time. So a big advantage.
Yep. Thank you. So today we'll spend more time on pricing and profitability diagnostics. Like typically when we meet with clients, there's a couple of sort of major kind of work streams that we work with them on. Right? One is pricing and profitability improvements. The other one is sort of incremental revenue opportunities through upsell and cross-sell identification. So today we'll focus on some of the modules that you see on the screen. We'll do a live demo in a sort of a case study format. Well, we have an executive view, right, which is is sort of a longer term trends around discounting, price realization, customer trends, et cetera. We have a module in revenue and gross profit deep dives, right, which is simply a sort of longitudinal analysis of how sales and gross margin profitability develops over time. It's often a blind spot for complex organizations, right? So if you think about a distributor with 20,000 different SKUs, you need to know which customer product mix drives some of the results, and that's often a blind spot for customers, right? A pricing simulator. So we actually have a couple of simulations that are built in, both driven by elasticity modeling that's happening in the background. But we have a pricing simulator which will show you that helps you quantify the price, the impact of price changes before we actually execute it, right? And it's really good for pricing quick wins, right? Which is typically the first step for any company that wants to start their pricing and RGM journey, right? As we build the foundational pricing analytics, which is Revify, and then take care of your low-hanging fruit to drive 1%, 2%, 3% net price realization to your business, right? And then we'll talk about assortment analysis, cross-sell. And it really sort of helps visualize clients, which portion of the organization yield the least or the most profitability, and where you have an opportunity to do cross-sell down to the customer and the SKU level, right? And we talk about how we did that and kind of what the analytical approach is. And then finally, we talk about customer analytics, right? So you can visualize where growth is happening in your company, whether it's a certain geography or certain product segments, and really helps you understand better your customer profit contribution. And last, but the most important, which customers are loyal versus which customers are about to churn or have a higher propensity to churn. So again, churn forecasting and mitigation is a sort of a key advanced analytics component that we offer as part of the Revify solution. So maybe I'll stop sharing. I'll turn it over to Enrico, who can start with the executive overview, and we'll go through each module, and you can kind of see how the tool works.
Perfect. Sounds great, Armin. Thank you. So if we go into the actual solution, let me share my screen. It should be coming up. Perfect. You should be able to see this, Armin, right?
Yeah.
Perfect. Great. Thank you. So what you see, this is the landing page of our solution, and this is what any customer that signs up with Revify will be able to access and use single-handedly. The data that we have in the demo here is actual real customer data. However, it's being very heavily sanitized. And so, A, it's impossible to ladder back to the customer that actually we've been working with, from which we had permission to use this data and sanitize it. But B, what you also see is that there may be some imperfections on the data, which, to be honest, is completely fine, because I'm sure that in any of your businesses, you will see those type of inconsistencies any moment of time. So it's important for any tool to be able to work around those type of data limitations and data anomalies that you always have day to day. So on the left-hand side, you see the different buckets that Armin mentioned before. We're going to go in the executive dashboard. We're not going to take you through all the views. Each of them has specialized views, whether the customer is looking at customer trends, discounting trends, price realization trends. But the one that we would like to spend a little bit more time today and show you is the price cost. And the reason why we picked this one is, of course, due to tariffs and due to cost inflations. This is one area which is very high top of mind for customers. And it's really trying to understand, if I look at my price and cost, how is this impacting my top line and bottom line? And the way we visualize this for customers is to be able to look at it in two different time frames. First of all, looking at obviously from a year-over-year perspective, which often ties to how customers are gauging their performance when looking at their financials year over year. But then the other one is looking at it from a sequential standpoint, and so looking at it from a month-to-month perspective. And this is important if you're not already doing this within your business, because to us, that gives a much better understanding of what is the velocity of your price and cost actions over time. And of course, those, if done consistently, will then resonate and show up in the year-over-year statistics as well. One thing that we see in this business, for example, is on a rolling 12-month basis, they have actually negative price. And so the green line is lagging the black line, which is the cost line. Whereas they're doing a pretty good job at fending off inflation and taking cost out. Net, this is yielding very marginal upside to the bottom line and the top line. But of course, our focus with the customer would be to say, hey, if you're doing such a great job fending off inflation and actually driving deflation, how can we make sure that some of this price impact stays in your pocket longer? And to do this, you start the exercise of dissecting, and you see here that we have multiple ways of being able to drill down in the data and look at it from different levels. Of course, the customer will have complete prerogative of doing this at their own time. If they want to click around and explore every single facet of the business, they're obviously free to do so. But the value added that Revify brings to the table is that we will be doing all of this on a big scale behind the scenes and being able to report out and highlight the areas where we are seeing the opportunities. So on one side, you have the whole diagnostic, both on the health and the performance. On the other side, you also have the ability for the customer to be able to look at the data and determine what the opportunities are. So in this example, let's say that the customer wants to look at it by product line and will say, hey, let's look at it at product line number one. That is the area that I really care about. And you see that in this area, especially month over month, you have one anomaly, as I mentioned. Let me just close this filter for you. One anomaly up here, but for the rest, they've done a pretty good job at trying to keep cost and price in sync over time. Year over year, obviously not as clean picture, but you see sequentially that they are working on it. On the flip side, if you look at a different product line, let's say product line number 9, this will show you a different picture. So in this case, what you're seeing is that, again, the black line is above the green line. They have started to make progress around that. And so the customer is saying, hang on a second, we're upside down on price cost, let's work on it. And you see that over time, the year-over-year numbers should start picking up that same sequential improvement as well. So again, just one way of helping customers understand what's going on the price and cost scenario. So that's one view on the executive summary. As Armin was mentioned before, the revenue and gross margin walk is one area that customers really see a benefit with a Revify solution. And the reason for that is we sometimes have customers or sellers saying, hey, yes, I got you. My prices are upside down. I should be doing better to offset my cost. However, my volume is taking care of the gap, right? It's paying off. And the beauty of having the net sales and GM walk is actually be able to provide that walk sequentially over time and be able to visualize how is your sales and your gross margin dollars and your gross margin percent walking between two different periods of time. So in this case, for these customers, we have all the different regions of the business. They are selling $5.4 million for this time period, which is April through May. And their business is down to 4.8 million. So then the question is, what are the key components between price, which is actually accretive in this area, volume, which is a negative, and then mix, which is also helping them. And what you see at the top is we actually have other filters. These are the same ones that you saw in the previous slide. So you'll be able to say, hey, I want to see only a specific region, or I want to see a specific product line, the different taxonomies for customer and product. But you'll also be able to change the breakdown level. So you could say, hey, I want to see by category, not by region. And you also be able to change which time periods you're actually comparing. So you could say, I want to look at it, for example, over a 12-month period, or I want to look at it for the prior quarter. And once you select this, you'll also be able to change what is your comparison period. So you could say, hey, I want to see it against prior year. And so let's say this is Q2, we would say Q2 this year versus Q2 last year, or you could look at it sequentially again. And so this will be comparing Q2 this year versus Q1 for this year as well. So very important ways of being able to change the time frame, drill down, be able to look at your data from a quarter to date, year to date, or specific quarters, and be able to understand exactly and open that black box to say, why did my sales go from X and Y, and why is my margin not moving by the same degree to the same parts? And you can look at it from a gross margin dollar perspective, and you can drill down in different areas as well to see where you have different drivers. I would just add one more thing. Of course, each of those columns have specific drill downs. You could also look at this is looking at the price implications. And so visually, you're able to see your price and the different customers. And again, through the filters and so on, you will be able to slice and dice your business and understand where you're leaving money on the table and where the opportunities are, which is what we'll be exploring as part of the engagement. So let me stop here. If you have any questions, again, please feel free to jump in on the Q&A, and let me stop sharing and pass it on, Armin, if you like to go through the price simulator.
Perfect. Thank you. And just if you saw the previous module, most modules, we've set it up in a way where we recognize that all organizations are going to have a need to export things into Excel, right? So we actually set up the modules in a way where if there's sort of more detailed analysis or filtering or whatever else required beyond kind of what the tool provides as a default, users can actually export it into Excel. They can kind of further manipulate the data. So, but let's talk about price simulation. So you'll see on the previous section that there's a price analytics simulation kind of module that has several components, right? But really, this module kind of moves the discussion from diagnostics to sort of more concrete P&L outcomes, right? And so what you see here is sort of the classic, or at least what I kind of deem as a classic evaluation of a business, right? Either by customer or by product. So notice here we're just looking at SKUs, but we can easily do the breakdown by customer. But we start by segmenting this portfolio, right, based on two questions that typically most commercial leader wants to understand, right, or at least that they care about, right. So one is, where's my revenue concentrated? My number one, and the two, at what margin are we actually earning that, right? So what you tend to see is a cumulative percent of net sales, right? So the further you are to the right, the larger the customer or the product is, and then the further you are to the upper section, the more profitable that is, right? And so we're segmenting out the portfolio into these, not quadrants, but call it sextants, right? And notice we can apply thresholds that we believe in the business are important. So maybe have a minimum margin requirement of whatever we set it up as 15%, and then maybe the upper threshold is 40%, right? Again, this really depends on your business. But we've broken down the business into things that we need to protect, right? Best of the best, right? These are high sales SKUs and high margin, right? And on the other end of the spectrum, we have the dead zone, right? Or the worst of the worst. We need to fix this now. And typically for most distribution type businesses, long tail of the SKUs, like lots of kind of niche type products, right? That certainly have an opportunity to be rationalized from a pricing and margin standpoint. A lot of them are add-ons, or they're being bundled together, or they're being used as sort of free samples to give away just to get the business. But the cool thing you can do with this one, and underneath the hood, we actually use elasticities, right? We do customer SKU level elasticity modeling. If the data is too sparse, which is typically the case for most distributors and manufacturers, you have a long tail where the data is really sparse. We do what's called a hierarchical imputation, right? So we use sophisticated modeling for data where we have good enough signals, and we use hierarchical imputation for the rest. But we can now model things, right? So we can actually model this dead zone. If you just glance at it, it's 7% of the assortment and only 3% of the sales, but a dismal 0.6% of the total gross profit. So right, maybe I'm interested in simulating for these right? So I'll highlight these SKUs, right? And by the way, I can filter this for a particular segment of the business, right? This is just for the overall business. And I can either see some further details about the selection that I made, or I can run a price simulation, right? And I can run the simulation two different ways, right? So I can either change the price. Oh, and by the way, in the previous screen, I don't know if you saw that there's a section where you can put in cost changes, right? So if you know there's another tariff coming, right? You can actually assume a certain cost change, and that cost change will propagate down into the data. And then you can use that in the simulation to understand, well, what sort of pricing action I should take to mitigate that cost inflation due to tariffs, right? But let's just, for the sake of this example, let's try out changing the price by 10%, right? And so notice what will happen is, well, certainly units went down, likely not a lot of elasticity with these types of products. I think we modeled, like the data that we use is like, screws and whatever else type kind of distribution model. Net sales increased minimally, right? But look at gross margin, right? So gross margin actually went up by 50%, right? And so it's quite a substantial change, right? For a section of the business that is relatively low risk, right? Very low volume, right? And again, underneath the hood, driven by elasticities, you can view the breakdown by SKU, or you can view the breakdown by customer if you choose to have this at the customer level. Now, if the objective is sort of consistency rather than a blanket, price change, you can also change things and adjust it, right? So you can actually change this to be anchored to a gross margin. And in the previous screen, you notice those gross margin thresholds. Like, what is the minimum gross margin that I need to hit in my business or this product line or this category or whatever else? You can actually do that. You can select gross margin as the anchor, and then you can say, hey, I want to change the gross margin to be anchored to the upper margin threshold, or I want to anchor it to the lower margin threshold, and that will also change the simulated results, right? Okay, so that's kind of the idea. Again, elasticities are the ones that are driving things in the background, right? The second piece is we move beyond sort of simulation, right? We have some sections around price execution, right? So this is where we look at price band and price point profitability to really kind of surface areas where discounting has sort of created this pricing jungle for our business, right? And not just sort of identify the price dispersion, but also identify where there's gaps in the price ladder and sort of imply some white space for price moves or for like a new price stack architecture that sort of doesn't exist within your portfolio, right? And so again, you can filter this business, and we recommend looking at price dispersion for either a particular category or particular brand, et cetera, right? But you can just kind of visually see for certain categories. And again, with all these modules, you have the flexibility to view the top 5, 10, et cetera, things that matter to the business, right? These will automatically be sorted based on the metric that matters, which is revenue, right? Net revenues. But you can view this breakdown by category, by product line, et cetera, et cetera. But again, mechanically, you can just see what is the price dispersion. You can further diagnose and dive into a particular category or whatever the level of display is. Then you can see how many SKUs belong, and then what are the units, and just visually identify areas where there's a large price dispersion, right? The more interesting piece is the price point profitability, right? This is where you can actually filter for a particular business, right? Whether it's a brand or product line, et cetera, et cetera. And let's say again we sell very kind of low priced products as part of this simulated data. But if you just kind of notice visually, right, we can evaluate several things in this one. One, you can evaluate, let's pretend that you filtered your business for a particular category, which price points drive the greatest combination of, let's say, gross margin, or the greatest combination of gross margin per month per customer and sales velocity, right? Net sales per month per customer. So you're equivalizing these metrics to adjust for the fact that you may have different number of SKUs involved, et cetera, et cetera. But visually, no deeper analysis needed. You can visually just kind of see, hey, what are the sweet spots that we've offered in terms of pricing for this particular product, right? And again, I recommend you kind of filter down to the level of analysis that is really needed. But visually, what you can do, pretend that this is the same, like one product line that you're evaluating. You can just visually look at it and say like, oh, there's like this complete white space in some of these higher price points. Or even if I reduce the price points and I want to look at a price range of 10 cents to $2, just visually, you can kind of see, well, there's a clear gap, between like $1, and $2, right? And I can further segment out the market and say like, oh, we're selling lots of units at these really low price points and some more units between, $1.70 and $2.25, $2.15. I don't have any products in this kind of $1 to $1.75 range. Maybe I should look at what the competition does, and if it's justified, I should introduce something in this range to sort of cover this gap, right? And again, it gives you some dynamism on how you want to look at the price dispersion here, right? The next couple are also really relevant, right? So you can look at discounting, discount curve analysis, right? And again, filter it for whatever business, whatever time frame. Let's say I want to look at the top 4 sales groups, or I want to look at it by category, et cetera, et cetera. And I want to filter for a particular area of my business. But visually, what you're seeing is a trailing 12 months, again, or whatever period you want to look at, versus a base period. In this case, it was the prior trailing 12 months. You can see where you've given discounts in this period versus the prior period. You can see how discounting behavior has changed, right? So you can actually see how the sales team has changed their discounting behavior in the current period versus the prior period. And again, this is fake data simulated off of actual kind of patterns. But typically what we tend to see with a lot of industrial manufacturers, distributors that we work with is lots of increments of 5%, lots of anchoring to whatever the discount approval allowed discount approval is for the next manager up. So typically it's going to be their direct manager or the sales manager. We see a lot of percent units, which this displays. So this displays discount percentages and percent of units, right, for the business, but lots of anchoring to that, right? And this is a really good way to understand, well, guys, how should we change the discount policy for the company, right? And it's one of the easiest things you can actually drive some pricing quick wins for the organization. There's a lot of anchoring to whatever my sales manager can approve. Guess what? I'm going to reduce the sales manager approval by 5% or 2%. Let's see what the results are. If there's no loss in units, guess what? You just gain an extra 2 to 4 or 2 to 5% in gross margin. the second piece, and I'll try to wrap this up so I can move along, is a discount simulator, right? So this is in a similar manner that we did the pricing simulator. We can actually model the impact of changing our discounting approach, right? So again, you can view this by customer or by product or whatever else you want to look at. This is by customer. And again, it looks at a period that we're selecting here, right? Trailing 12 months, looks at the net sales for that customer as well as the discount being applied, right? And we can do a couple of things, right? We can set a upper or lower threshold for discounts, right? And again, fairly arbitrary, but hopefully it's based on some analysis. And we can say, okay, what happens, if I want to, shift the discount for these customers or these products down to this threshold that I set? So I'm just going to highlight these. And again, ideally, you filter this for your particular business and you filter it for a particular product line versus kind of a blanket approach. But even as sort of as just an intellectual exercise for finance, guys, what happens to our business if we're much more judicious about our discounting? We don't have this pricing or discounting jungle that we have. We can run a simulation, right? So notice what I selected has a weighted discount of roughly 4%, right? And this is the size of the business that it represents, right? So what happens if I bring this down to the lower discount threshold, which was 3% that we specified? What is the impact to the business? Notice the module or this view will actually collapse all these customers into this 3% bucket. And all of a sudden, this adds an extra $75,000 into my margin, right? And again, most of what we selected were small customers, but you get the idea. Underneath it, there's elasticities being considered and applied. But this is a good way to just sort of understand, hey, great, I have an extra, $75,000, $80,000 that I can drive this month. Let me understand the top categories or the top customers or the top product lines that are driving this, right? And you can actually slice that opportunity in decreasing order based on those things that you've selected, right? And you can export the details, right? So if you want to further say, hey, I really only want to address a portion of this business and go after that, you can export this into Excel and just work with your sales and finance team to address those elements. Okay.
It's amazing how you can design any fancy new piece of equipment, but the first question is, how can I export in Excel, right?
Yeah. It's always the case, and it's funny just kind of being a long-term data science guy and sort of an AI aficionado, although I'm using the term AI with somewhat of a marketing cringe, right? But that's the first thing. Like, we've built some amazing, sophisticated, real-time optimization, price optimization solutions for companies and like promotion optimization. The first question that we get from salespeople is like, this is awesome. Like, how can I export this into Excel? And that's a running joke, but that's actually true in organizations. Let me address a question. So big story about the screen size. We'll send out the presentation. Christine is asking, can businesses change the effects in the price volume mix margin bridge, i.e. exchange rate or aggregation level, product only, customer only, product customer, various hierarchy? Got it. Good question. The answer is not yet. So the displays or the analysis, that's very dynamic, right? As you've seen, you can actually set that at various levels to understand which category, which business line, which customer segment, et cetera, is driving things. You can only kind of zoom in on that particular area of business. So the analysis or the display is very dynamic. The underlying kind of code as part of our pipeline, right, is the actual calculation pipelines that are feeding the dashboards. That is set at the customer product level. But what is happening underneath the hood, Christine, is when we do the data intake with the customers, we sit down and we have the conversation around, well, how do you define a customer, right? How do you define a product? At what level do you invoice, and at what level are you influencing pricing decisions? And we then do the calculation at that level, right? So the customer says, hey, we do price changes and price lists at the customer, bill to level, right? Then that's the level that we do the analysis. Versus somebody may say, oh, we actually have quite a variation at the ship to level. Then when we do the analysis at that level and the SKU level, right? So there's definitely flexibility up front, but then once that calculation is set, aligned with the customer, that is not changed, although we can change it later on. Hopefully.
Yeah, it's a great question. We spent a lot of time debating whether we wanted to build that functionality in to be able to recalculate on the fly at different levels. But one of the reasons why we elected to go the route that Armin just mentioned is also the potential risk of creating artifacts that are not real. And so whenever you're recalculating at a higher level, it means that you're averaging together different data points. And that could be misleading where you have a conversation with a sales leader and you say, well, it looks like you dropped your price in this area. And they cannot reconcile with the data to say, well, give me a list of customers and products and show back useful way of looking at it, but there's also some potential dangers.
Perfect. Thank you. No, appreciate the questions, guys. So let's talk about assortment analysis, right? So whereas kind of pricing and discount simulators targeted price related, right? The speed does a couple of things, right? It kind of clarifies the mixed economics, right, and looks at attach rate growth through the upsell and cross-sell recommendations are built in, right? But it really starts off with some sort of descriptive diagnostic type analytics. So we can look at the typical share of profit versus share of sales type analysis for the products. We have the same view replicated for customers, right? But this is where you can evaluate your business at the product or customer, a category or product line, SKU, et cetera level. You can filter things. And again, display top 5, top 10, et cetera. But you can visually see which areas of your business matter, right? Which area of the business you need to focus on versus which area of the business or your product portfolio are ripe for a price increase because there's just a disconnect between sales and profit. So again, visually you can kind of see whatever this category is, category 4, right? 56% of the sales, 60% of your assortment, but only about 30% of the gross profit, right? And you can see that being reflected in ASPs as well as the weighted gross profit per units versus you may have a category like category 5, right? It's much smaller in terms of the assortment, right? Like 1.5%, but it has an outsized impact on gross profit, like 8%. And again, it's reflected through the ASPs as well as the gross profit. So again, very basic fundamental analytics, but you would be surprised at how many companies don't have this view readily available, so they can kind of standardize the business and understand where they need to focus. The next analysis, right? You kind of basket affinity analysis modeling to kind of distribution and manufacturing environments by measuring co-occurrence, right, over a longer time frame. We typically pick a year or 6 months, but we look at customer product level purchases and we look at co-occurrence of purchases together, right? And this simply just illustrates over here, if you look at the screen, and we can look at lift, et cetera. But this illustrates product lines and how frequently are they co-occurring together in terms of customer purchases. And we actually use the underlying detail that I'll show you. We use the underlying detail to express lift, which is to say, how much more likely is product B bought when product A is bought? That's the underlying sort of analysis that we do, right? So we can immediately see like, hey, if somebody buys SKU, whatever, 18, they have a 4 times higher likelihood than otherwise to buy SKU 35, right? And we have some stats on what is the number of transactions, et cetera, et cetera. But the way we use this analysis and this modeling, right, is then we go out and say, okay, we know Enrico bought product A and product B together, and we know how much, what is the typical ratio of those sales. And then we say, great, Christine bought product A and buys it quite a bit, but she has not bought product B at all, right? What is the value of offering product B to Christine based on her sales patterns from product A and based on our knowledge of the sales trend, like the sales ratios between those products? And that's what we're quantifying in the next one, where you can actually look at the kind of the details of this association analysis at the SKU and the customer level, right? So you can actually see, maybe I want to limit it to, I don't know, $50. This is, as you can see, there's like a bunch of small value products that this distributor is selling. But what you can see here is turning these patterns into actual customer-specific recommendations with a quantified upside. So you can actually see what is the customer, what is the product, and what is the revenue upside of offering these products to these customers. And we have a fairly high degree of confidence that these customers should buy and would buy these products because other customers similar to them have, essentially experienced and have shown those patterns of co-purchasing these products together. So you can immediately see there's a revenue upside of $1.5 million with a margin upside of $400,000. Again, based on fake data. With actual companies, this tends to be a lot higher. And what we tend to see with clients is this is an easy kind of 5 to 10% upside that we can identify through cross-sell efforts that you can then just export to your sales team and by sales region, market, product segment, et cetera, you can offer the insights up to the sales team. And the last one that I just maybe want to touch base real quick is this idea of customer versus business value, right? And so to sort of align the mix and the price and all these elements that we've talked about, right? We actually score each SKU along 2 dimensions. We score them along the importance to the enterprise, which is ITE, and we score them along importance to the customer, right? And so this sort of, if you look at importance to the enterprise, it's really based on the revenue that we're generating off of these products, the margin dollars, the margin profile, et cetera. The importance to the customer is how frequently they're purchasing it, right? And how many customers are purchasing that product, right? And so what is the product that is important to the customer versus what is the product that is important to the business? And this sort of delineates our business into stars, priorities, customer essentials, and sort of niche products and add-ons, right? You can kind of see the details here. And what that allows us to do, right, is that allows us to immediately see, hey, we have a bunch of niche products where, sure, the margin is better than the stars that we have, but it still has opportunity to grow. And maybe we should think about increasing the prices on these ones because these are niche add-on products. And anyways, that's the kind of the perfect area where we can actually get some more price, especially in an inflationary environment. Okay. So I know I went through this really fast. Maybe I'll address one more question. We have a question from Christine. SKU association, kind of a market basket, frequency table. Yep. Exactly. Yeah. So maybe doing this in different product and customer hierarchy levels with drill downs. Yeah. So that's exactly what we've done, Christine. We've essentially taken the market basket analysis algorithm, your classic market basket analysis algorithm, and we applied it to a distribution manufacturing environment with a longer time frame to measure associations and provided some flexibility on identifying the opportunities. So I will stop right here, and sorry for those that couldn't understand my accent. I will pass it on to Enrico because we have one other module. Accent, yeah. We have one other module to go through. Yes, mine is an Eastern European accent compared to the melodic sounds of Enrico's Italian accent.
Of the Italian accent. Yeah. But Christine is right. I mean, if you look at it from that perspective, the whole idea of helping customers is understanding what the opportunities are, understanding where there's lowest amount of risk. So the work that Armin and team have put together on the machine learning to create the price elasticity, and then now understanding the customer versus the business value, ideally points you to a stage whereas many companies get completely paralyzed because they're so afraid of losing customers and volume through a price increase, you can now have a conversation to say, look, let's do something which is not on a product that customers really care about, right? It's not the bread and butter that the customer is coming to you for, because that will be risky. And focus on products where there is lower elasticity, which means that you most likely have more opportunity to move price without triggering a volume response at the same time. And of course, you can model it out and you can say, even if you have a very small decrease in volume, you're still way better off than you were before. So getting all this data and insights into these type of models really help us have much more intelligent and thoughtful conversations with clients. The last part we would like to show you today is the customer analysis segment, which you see here. There's 3 views. We won't take you through all the views. The first one is more of a geographical view so that the customer can be able to see how the business is performing on a map. And so where it's growing, where it's shrinking, where do they have pockets of opportunities or erosions. And of course, sometimes you have organizations where they're under attack by a local competitor. And so this helps visualize those type of instances. The next view is a customer view, similar to the composition view that Armin showed you on the product. This allows you to see how much business is being driven by certain customer types. And so being able to say, hey, these type of customers generate X amount of count of customers, but is it a disproportionate value of sales or gross margin? And so also there, be able to drill down and understand opportunities. But the part I would like to focus the next few minutes before we leave you today is really on the RFM analysis. And this portion is top of mind for a lot of customers because one of the key questions that we have is, hey, we are growing on a high level of a business. And so we are growing new business acquisition, for example, and yet our top line is not growing by the same degree. And of course, what this points to is the fact that they are having customer churn at the same time. And so through machine learning and being able to work with customers to determine what type of time frame are we looking at. For example, in this case, we're saying 12 months. So we're saying, hey, if a customer has not bought within 12 months in your business, shall we consider that customer loss, right? And we can change that time frame. But the idea is to be able to then categorize all of your customers in your customer base in different buckets and be able to say, which areas should the biggest focus be in. And so any business will have champions, and you'll see here that is the biggest driver in this case with active customers and so on. But of course, most businesses will want to focus in areas that need attention. And here you'll be able to actually see all the individual customers that fall in those buckets. And so by measuring customers through this model, which is the RFM, which stands for recency, frequency, and monetary value, you're able to create a different composition of customer base and be able to determine which customers are likely to churn before they actually churn directly. And if you double click on this, you'll be able to take any of these areas and drill it down. So in this case, we have the champion selected. And so you'll see that customer 1829 is the biggest driver. On a frequency basis, they've been buying 174 times. The monetary value is extremely high, over $2 million compared to the other ones. And last purchase that they made was actually only 2 days ago. And again, you'll be able to see all the customers that make up that grouping of champions. And as Armin pointed out, you'll be able to extract this to Excel as well. But of course, most customers say, hey, I want to really look at the customers that need attention or at risk or I cannot lose and so on. And so you'll be able to filter this and be able to say, hey, I have this customer 4793. They have a pretty high frequency. They have a high monetary value. However, the last time that they purchased was 170 days ago. That is concerning to me because I have other customers that instead have been buying, more recently than that. And so there may be something going on. Maybe a customer has a foothold. Maybe there's a genuine reason where the customer has a shutdown for maintenance and so is not a real risk. But again, this allows you to be proactive and be able to export this list, divvy out by your sales managers, and be able to then track progress. Some people are able to ingest these in CRM systems as well and trigger tasks around this type of activities. And then the last portion is, of course, the customer detail. And so as we filter in the previous page, sorry, my voice is going, you'll be able to actually see all the different customers, the data behind them, and be able to divide that, all of these categories by the different groupings and take action as part of your business without incurring, churn and then realizing too late after the fact. Anything you want to add to this one, Armin?
No, the only aspect is so this is part of the turnkey modules that are built in for every customer that will sign up for Revify. We have customers, sometimes they may want like a custom churn modeling solution, right? Where they want to build a module that has, predicts with certain degree of probability which customers are going to churn in the next 30, 60, 90 days and why they're going to be churning and what can we do about it, right? So we do offer custom modeling and custom modules for those customers that are based on sort of a more complex machine learning model based on sales transactions, customer communications, and sort of other exogenous data. So that's also a possibility.
Perfect. Thank you. So let me stop sharing here and pull up the last couple of slides before we depart today. And I don't think there's any questions in the meantime that we haven't answered yet, right, Armin?
Yep, we're good.
Perfect. Okay, great. And let me just maximize this so that hopefully for people on online, they'll be able to see the slide better. So just summarizing what we covered today, the way we design Revify and the way we're approaching clients is to be able to stand up a solution that is friendly for budget and speed of implementation. We're able to drive together with the client continuous improvement. And the beauty of it is that we don't necessarily have a fixed set of actions or course of actions with the solution. We are able to meet where the customer needs at that moment in time. And so generally customers will want to have the data health diagnostic and to have the first diagnostic complete in terms of where the opportunity is. And then from there, the beauty of the solution is that it's extremely flexible. And so we see some customers saying, hey, this is great. I now have a list of 10 opportunities. They've all been ranked. Armin and I will have provided our recommendation as to which ones to tackle first, because very often you do need to stagger some of these activities in order to have the build-on effect on both how you implement them and how you reap the benefits. But in some cases, customers say, hey, you know what? I got the first two, I'm comfortable with those. Why don't you guys help me out with items 3, 4, and 5? And so we can pivot and line up add-on consulting to specific areas of need. And then with the solution, given that we will refresh the data on a weekly or monthly basis, depending on what the customer requires, we now have online trackability to be able to say, are we making progress in these areas where we wanted to focus or not? We have seen some instances where customers say, hey, I've got this, I'm going to run with it. And then fast forward a few weeks later, it's not as easy as it sounds, right? Especially when you go back to the day-to-day churn of your business, it's difficult to implement new initiatives on top of what you're already doing. And in some cases, they call us back and say, okay, on top of the 3 that you're working on, help us on number 1 and 2. We need to move faster. So completely up to the customer. The way to interact is feel free to go on our website and learn more. If you like to contact us directly, just send an email to support@myrevify.com or reach out to Armin and I on LinkedIn as well, whichever is more convenient. And then the last thing, I know that we have several pricing and profitability practitioners on the call as well. We do have a referral program that could be added for you if you have clients of yours where you like to bring the solution and be able to work together on implementing and running the diagnostic with customers. Or you may have other companies that that would benefit from this solution and you want to refer us to them. In other case, we have the details of the referral program on this presentation, which we'll send out. Is also available under the pricing tab on our website. And is obviously, a 10% opportunity for people that would like to help us reach out to customers. The fact that we are working with a pretty fragmented market base is by design. We believe that small and medium businesses in manufacturing, in distribution particularly, are the sweet spot for this solution. But of course, it is a very fragmented user base. And so we'd love to have your help as well, make sure that this is presented to companies that would benefit from this solution. And I think we're right on time. Armin, any other good closing comments for us?
No, I just appreciate everybody's time and thank you for all of you guys sticking over the last hour. We will send out the recording, the materials, as well as the details on the referral program. And if you have any questions, just please reach us out. Reach out to us either at the email provided or through LinkedIn. And enjoy the rest of your Thursday, guys. Thank you very much.
Thanks, everyone. Take care.
Bye-bye.